Hey folks, thank you for stopping by Money Me and checking out my channel. Greatly appreciate it. My name is Pat Dees, and this channel is all about money. We're going to talk about real estate, credit cards, stocks, options. Lately, we've been focusing a lot on stocks and options, but as the channel grows, we are going to add more content that is all things money related. So I do appreciate you guys stopping. And hey, thanks for the response I've been getting on the last two videos with Fubu and with Roku. So I greatly appreciate it. But this is going to be one of those videos, basically like the stock of the day, and I want to talk about Ollie's bargain outlet. Now, as you can see, as you're watching here, I have pulled up on my screen the Webull desktop app. If you guys are interested in joining up, Webull doesn't cost you nothing. You can get 2 free stocks. I always throw that out there. The link is in the description. I get a share or two, depending upon which month it is and stuff like that. But if you don't, you don't. It's okay. Stick with your traditional broker. Again, I just throw it out there if people ask, hey, Pat, what's that desktop? How are you pulling up those charts? This is exactly what I'm using, the desktop here. And you can do it from your mobile phone. But Ollie's has my attention. I am actually, for a living right now, I've been last 3 years a full-time reseller. So I go across the country and I look for things to buy and resell. And sometimes I can get stuff at Ollie's that I can flip because they buy such large quantities of stuff that sometimes the stuff is even cheaper than Walmart. And the deals are so good that, you know, at times, not all the time, that I can, you know, so that's how I'm familiar with the chain. I'm based in Pennsylvania. I'm about an hour and a half west of New York City, north of the Poconos. And so that's how I'm familiar with Ollie's. And Ollie's is a Pennsylvania-based company. Their headquarters are in Harrisburg, Pennsylvania. And I'll give you a little bit quick background. And what I'm going to do is I'm going to show you if I was looking into a stock, what would make me look into it. So now I pulled up here, and I'll show you this screen. And I pulled up Ollie's. Now, Ollie's on Friday closed at $41.96. And full disclosure, I did buy some shares about 2 weeks ago for roughly $44. I am not a licensed broker. I guess I do this for entertainment purposes. That's what you're supposed to say. But, you know, I guess because you got to do your due diligence in doing your homework. And I want to say I said to buy it, and then, you know, a week later it's down to 37. So, you know, you get it. No one should be buying anybody's stock recommendations without doing their own homework. This is just to highlight something that I'm doing, and maybe you might want to check into the company. I like the company. As you can see, this is a quick, now in Google I put in Ollie stock, so this is a quick snapshot. Ollie's Bargain is an American chain of discount retailers founded in 1982, and as of November 20th they have 407 locations in 28 states. So that's not even up to date. Even though the economy is in trouble, and things are happening, I like a company that can offer stuff. You know, I used to say, oh wow, Ollie's has junk. I went in there once or twice and kind of didn't understand the concept of the store, and shame on me, because they have new stuff. I mean, I guess when I first walked in with the the way some stuff was kind of piled on, it looked a little junky and some stuff, but they sell new Dawn. And if you look at their prices, a lot of their prices, even on books, a lot of their prices are 30%, 50% less than your Walmarts or your bookstores and stuff like that. What I like about Ollie's is that even in tough times, there's things that people are going to buy there, that you can buy groceries there, you can buy a blanket, you can buy a book, you can buy a heater, you can buy a hammer. They are a good, nice little variety store, and affordable stuff. And if you join up, and I'll pull the chart back up over here and I'll talk a little bit more about it. This is a monthly chart. I'm going to pull up a daily chart. They have rewards. I know if you buy so much, you get 10% off. So there's even, you know, a lot that they offer. What I like about the company is honestly is the price, that based on their market cap right now is about $2.7 billion. And let's look back at the stock. I mean, the stock was, I mean, wow. Let's go back even to a weekly chart. The stock peaked at 123.52 back in January of last year, and it was down to 28 in March 20th. Well, of course, that's when everything was closed down. So it's had a really nice rise, but on average, I mean, and it looks like, yeah, it just became public. Looking back, it's only been public like 7 years, this company. There's a lot of room to grow. I like that they're small because that gives room to grow, and I also like it has a 1-year target. Now, let me see what on Yahoo it says the 1-year target. It's 58. Let's see what the analyst. Yeah, their average is 58 too. Now, 20% says underperformed, 80% between a hold, and 35% says strong buy and buy. They're going to keep growing as far as is because they're expanding and doing more stores. That's where I think the company right now trades at 15 times earnings. The earnings were $2.69. Let's see if there's any news on it lately. Oh, okay. It's 3 days ago. 10 new stock of a billionaire. Let's see. Was that one of them? Oh yeah. So the billionaire Stanley Druckenmiller, that's one of his picks, and right. So basically what they're pointing out is that the reason the stock went down is because as the stimulus government checks, there was a burst of consumer spending, and the year-over-year comparisons weren't the same because people weren't obviously spending as much. So let's see if there's any more news. I like it because it's cheap. Based on, I'm looking for companies that aren't overpriced and that are still gonna. No, it doesn't mean that this stock can't go to 30, 35. But I'm gonna be accumulating it, and with at the end of the day, if it takes 2 or 3 years to bounce back, I think it's a. I just see here Ollie's Bargain raised over $940,000 for the Marines Toys for Tots Foundation. I think with their small footprint that they have, there's a lot of potential to grow, and there's probably even potential to take over similar type. You know, there's always going to be people that have clearance and discounts and things like that to offer, and yeah, the market cap. Yeah, exactly. That's what I like about it. The market cap. It's only 1.5 times sales. So their revenue, they're doing roughly about $1.8 billion. They're making base 177. So after expenses and fees and taxes, they're making roughly $178 million. So they're about 10%. They don't have a whole lot of debt. And they have $230 million cash, about $400 million debt. Now, 20% of the float is short. 20% of the stock is short right now, meaning that 20% are borrowed and thinking that it's going to go down. The 50-day moving average is 47. The 200-day moving average is 69. The 52-week high is 98, and the 52-week low is 41. So we're definitely near the low. But you know what? I like to buy companies sometimes near the low. That's Let's pull up their website. And and this is not one of those stocks that you're going to buy for 41 and see it at 400 in 2 years. It's not Tesla. Here's their website. I talk about how you can earn points on. And I don't want to get too complicated in why we like the stock. We like the stock because of the price. They're making money in their stores. They're expanding. They're opening more stores. This is their website. Go check them out. I mean, Ollie's is not everywhere. They got a lot of, they're buying, as they say, good stuff cheap. And so they're getting in at the right price. And yet, even with the prices that they're selling at, they still are able to remain profitable. And they're always looking for stuff to buy as far as, passing the deals to consumers. And every retailer is faced with higher wages. That is definitely going to be an issue, wage inflation. But I like stocks that I feel that at $2.6 billion, this is, it's small. It's nothing. Let's give a compare. I mean, Walmart is huge. Walmart's market cap is $382 billion. Obviously, they have 10 times the stores. Dollar General, $47 billion. Dollar General has so Ollie's is small compared to a lot of these companies, but I like that because that gives them an opportunity to grow just as far as store expansion. So, and I'm looking for companies that are basically been beat up and that are selling for cheap and have the potential to surprise as in all a lot of your hedge funds and a lot of those type of companies are looking for cheaper ones and have solid companies that have good backing and stuff like that. So that is my stock of the day. You make your own decision when you buy, sell, or hold. We did buy some. We took a small position, and if it gets even cheaper, we'll buy even more. Honestly, we like to see the stock. Yeah, I could see the stock in the future $55, $65, and that's not a bad return. That's what I look for. I try to look for stocks that are going to give me basically a 30% return per year. And at the times when it's kind of being misunderstood and beat up, and yet they're making money. This company makes money. That's what I like about it. Yeah, they're only located in 28 states. So I mean, there's a lot of potential, and a lot of resellers use the store to buy stuff through them. So, all right, guys, I hope you liked this video. I didn't want to get over complicated, and I just basically went, this is a stock that we like. We like it at the 42. If you were to invest into it, say, hey, Pat, no, don't go dumping. If you had $5,000 and you want to invest, I would start out. Maybe I'd buy 25 shares. Maybe I would do dollar cost averaging because there's a lot of uncertainty right now. If you only have $5,000, you should never dump it in one stock. I would try to find a mutual fund that owns Ollie's and do it that way. But I would just be very careful right now because of the way that the market is and with things that are going across the globe and inflation and conflict and gas prices and stuff. It's very careful because there's full disclosure. You could wake up one day and everything could be down 10 or 15%. So if you have a little bit of cash to the side, and let's say, for example, you buy 25 shares of Ollie's and you knowingly want 100 shares, and you wake up one day and the stock's down 15, go in and buy another 25 shares, and if it holds that pattern for a while, and if 2 weeks after that's down, I'd buy another, and because you're going to get those bounce backs, you're going to get those there are days that crazy moments happen, and man, traders that could take advantage of that, uh, um, and make sometimes quick 20-30%. I've done it. I've done it myself. I've gotten to stocks that I've liked, and all of a sudden I got 30% return in 6 weeks, and I got out of it. And hoping to sometimes get back in, and then sometimes it works, sometimes it doesn't. So, all right, guys, thank you. Give me thumbs up and comment below, and have a great day.